All right, everybody. Welcome back to my channel and video 2 of charting. This is your host, Will Simon, price trap analysis. I'm going to be going through the pairs that was given out previous time. I'm going to be going more in depth on entries and going to be also giving some other setups for this evening and also some updates to what we previously saw. Now, if anyone has any other questions, any other requests, anything like that, don't be afraid to drop a comment on this video or shoot me a DM on my Instagram, which I'll post in the video description, as well as my Facebook as well, so that way we can get connected and just go more in depth on not just this whole strategy, but just like elevation in general of the human emotion, of the human psyche, the human mentality, and human consciousness. These are all topics that really, really interest me and intrigue me to the fullest. So with that being said, let's just dive right into this. So first things first, I'm going to share my screen and really give you guys more insight on what had happened previously. I mentioned that this video would be dropped on Monday, but I wanted to give it one more day just because I think the volatility of the markets was not existential, exponential. And when it comes to seeing moves happen and seeing things play out, like for example, I don't know if anyone remembers the GBP pairs that I was pointing out. The last 3 of them were extremely similar, very similar. So every single one of the GBP pairs almost identical. So nothing really happened with those ones, and we can kind of skip over them. But what I did want to go over was AUD, CHF, and really all the other AUD pairs, and just give you more of a breakdown of how you could have capitalized on these moves. Once we do that, I'm going to erase everything and really just go with the ones that are continued on. And then we can look at another tool, which I like to look at, which is called the harmonic scanner. And then this is where we ultimately collect our ideas. And this is where we get a insight on the market, or a forecast essentially on what we could be looking for going into this week. Right, this is the second day of trading in the trading week. And this is where you can really begin to see, these different setups play out with this tool. That's for later. I'll save that one. Okay, so let's just go through these first. AUD CHF. What happened on this one? It's a simple ceiling. It was a ceiling, and then the ceiling became a floor. Now you probably cannot see this on the 1 hour time frame, but when you see and zoom in a little bit more clearly, and I'm going to move this out of the way just so it's more clear as well. So let's say we go into the 15-minute time frame. We can see price was a ceiling over here, and then price kept tapping off, bouncing off, finally broke, closed above. So when I mean closed above, this is what I mean. I mean the open and the close of the candle is on the upside of the zone. That's what I'm ultimately looking for when I say a close above. I want both of these lines of the candle to be above this zone if it's going to be a buy. Now, if it's going to be a sell, I want it to do the opposite, quite literally the opposite. And what I can do is, what is this, invert scale? Yeah, literally. Same thing on the bottom side. If it breaks the floor, closes below, I want to see that. Then this candle came in and retested into this zone with a wick into that zone. So if you'd have entered anywhere in that zone right there, that would have been your entry, and that would have collected you a potential of 39 pips. you would have caught your 30 pip take profit for the first order, and you never hit your stop loss or your stop profit. So you should still currently be in this one if you were taking the trades. Let me invert this back. So that's what it was. That's on the 15-minute. We can also go even more in depth on the 5-minute as well, just to give you more of an idea what it truly looks like. So it goes up, it breaks through, closes above, and then finally goes back to retest in this area. That would be your entry. Once you have these levels drawn up on your cell phone or levels drawn up on your trading view on your laptop or your computer, you can see once it goes into this zone, then that's when you would ultimately capitalize on the entry. Press buy, 30 pip take profit, 30 pip stop loss. As soon as the price goes 10 to 15 pips in profit, you set a 2 pip stop profit to maximize your profits and minimize your losses, right? So that's that for this pair. What I can do now is just keep going. Right, this is AUD CHF, so I mean we can just keep going from there. This was AUD USD, so it was trapped in these two areas. It never broke through. It just bounced off this. So we were patient. It's a ceiling. It's a ceiling. Broke through the ceiling, is becoming a floor, and is now currently in 6.5 pips of profit. So you're still ultimately waiting to have this, unless you took the entry over here or over here, you would have had a 2 pip stop profit in place and it would have hit that 2 pip stop profit. So you're either you hit this 2 pip stop profit on this zone, or you're still currently in this. Australian dollar to the New Zealand dollar. This one's a little harder to see because you can just see like a clear break and then no retest. And remember our rule, no retest, no entry. So we can go really more in depth on why this happened. And the reason why we do this is so we can see, like comparisons, right? So when we go and look at the 15-minute time frame, this is what we see. We see just a string of all these green bullish candles. We see one of them close above, close below, or sorry, close above and then still keep closing above and ever closing back into the zone. So what I would do is go back into the 5-minute, so you're able to see this a little bit more in depth. And then yeah, once you get down to the nitty gritty of this, there was a clear break, a close above, and then a bearish candle, that red candle, and then finally a retest back on this level on that exact line, the 1.07137. So if you had this drawn up on your smartphone with a single horizontal line and another horizontal line here, you could have just been patient and then waited to see it close. Once it closed, you take the entry. Maybe you take it here after this candle closes on the 5-minute. Then you capitalize on all these moves. This right here, let's see. This right here would have captured you 95 pips potential. AUD, JPY, nothing really happened with this one. So price is still stuck in between these levels. This one is still relevant. This one, AUD, CAD, I was currently in it. Nothing actually happened afterwards of this. I took my profits, consolidated a little bit. This floor became a ceiling. This floor never became a ceiling, but ultimately this ceiling became a floor, continued up. This was a ceiling over here, and it broke the ceiling, became a floor, and that would be the current trade that we're in. But I mean, we can kind of delete this one too. Start fresh. For the Canadian dollar to the Swiss franc, we saw, again, if we go to the 5-minute time frame, we did see a break and a retest on the 5-minute. And it's really clear once we get rid of this circle. See? So it's a ceiling, breaks through, retests. Clear as day. Right? It's a ceiling. I'm going to move this out of the way too. So watch. Price goes into the zone. It's a ceiling. Goes back down. Price goes into the zone. Finally breaks above. and then does a close below at this zone, confirming this previous ceiling is a newfound floor. And then the move happens. That would have captured you a total of 41 pips potential. So you'd have collected your 30 pip take profit on the first order, and you had a 2 pip stop profit on the second. It would have hit your 2 pip stop profit. And then this is where we're currently at right now. It's using this previous floor. It broke through and is now becoming a ceiling. This one, I mean, it's looking like a good entry, but remember, this isn't for signals. This is like to learn the strategy. So if you want signals, you can just apply the rules that we're using in this. Where are the rules? Yeah, right here. Rules. 0.1 per $100. You want a twin trade. You want to, every 10 to 15 pips in profit, you set a 2 pip stop profit. You have a 30 pip take profit on one order. You have a trailing stop profit on the second order. You always use a 30 pip stop loss no matter what. As long as you're following these rules and following these parameters, this strategy will be successful for you. Right? So that was CAD CHF. Now we move on to CAD JPY. Same thing happened. And we can even look at this on the 1 hour. Price broke above, closed above, and then went back into the zone to retest and then continue on. So let's say you entered off any one of these areas or even in the middle of the zone. You had a potential of capturing your 30 pip take profit on this one as well. And then you put your 2 pip stop profit in place, would have hit your stop profit. The Swiss franc to the Japanese yen, this one here is just a little bit of consolidation. So I really wouldn't mess too much with it. It did do a break and a retest to the downside, and then you would have captured your 2 pip stop profit. So went out, closed. If you caught this, you never quite got your first TP, but you did have a stop profit in place, and then it would have hit your stop profit. And that's where we're currently at. So what I would do for this one is I would just update it, because trading is never going to be perfect. What it is going to be is consistent. So as long as you can learn to adapt to every single situation that the market throws at you, that's when you're really going to begin to take your trading to the next level. So you see this? That was literally me just updating my zones. So this is now a floor. So literally go back. From this to this. I hope everybody saw that. From this. So this zone up here and this zone up here to this. Because this is now the new ceiling that it made. This is the new floor. Just waiting for the same thing, a break of the floor, or break of the ceiling to become a floor, or a break of the floor to become a ceiling. That's it for Chef JPY. So that was an adaptive trade. So we can still currently watch that one, put it in the watch list, in the arsenal. This one, the Great Britain pound to the Canadian dollar. This one, nothing happened really, just bounced in between the zones. So this one's still relevant. GBP NZD, same thing. I remember all these Great Britain pound pairs, nothing really spectacular happened. Like they all just consolidated within the zones, which is gonna happen. So that's trading, folks. The reason why I keep these up here is because I want you to see that, you know, trading is about patience. So as long as we can maintain our level of patience and maintain our level of like our state, like Chris Derek was talking about this on the London session last night about how you can change your state before you act. If you change your state before you get on the charts, if you change your state before you get on literally any task that you're looking to accomplish, it's going to totally alter the outcome of that situation. So look, we saw a floor, we saw a break of the floor and a retest. That would have caught you your 2 pip stop profit. You would have put it in place after 10 to 15 pips, and then boom, it would have hit your stop profit. So this one, no longer relevant. NZD CAD. Now, a lot of people are asking me, well, why is this zone so like why are these zones so far apart? Why are these zones so far apart? Like I was showing one of my partners that it's 165 pip range of a zone. What you can also do is do this. Okay. So this is a possibility right here. The reason why I'm not doing this though is because I'm not going to get caught up in all this noise, in all this rubbish, these garbage moves, these up and downs of this market. I'm going to wait and be patient because this is a solid ceiling and this is a solid floor. So I'm going to wait for a break of the floor and I'm going to wait for a break of the ceiling. There's no ifs, ands, or buts. I do not waver from this strategy. So that's why we're keeping this one up there too. Even if it's 170 pips range, this is going to be a longer term setup. And if it does play out, it's going to be more guaranteed pips, right? NZD CHF, this one is just so choppy. It's wild. But watch, if you took this trade, price broke, became a ceiling. It broke the floor over here, became a ceiling. You would have entered, you would have put that 2 pip stop profit in place, and it would have hit it. So almost every single one of these pairs that played out, you're collecting either 2 pips and you're not having any of them hit your stop loss, which I'm going to show you in a second here which one of them hit your stop loss, because we did have a loss if you took one of these trades. If you took every single one of these trades, you would have had a loss. But nonetheless, that was for NZD JPY or NZD CHF. Again, this one we can adapt. We can go here, create a new zone, and then up here again. Then that would be our zone that we're continuing to look for. But to play it safe, this is what I'm going to do. Because it will be now creating a new floor. We're just waiting for a break of this ceiling to continue with this uptrend, or a shift of momentum to break this lowest ceiling level or this lowest floor level that it made, and then continue with that shift of momentum, maybe, you know, be the start of a new downtrend, because this is continually in an uptrend. Okay, so that's for that one. NZD JPY, it never really broke, so it's just still in this level, so that one's relevant. USD CAD, this was one of my favorite ones. Reason why is it had a lot of potential to the upside, and we're kind of seeing that now. But nothing's really going to happen until this previous floor became a ceiling. So now this ceiling has to be broken and retested in order for me to take a buy or a long position on this one, right? Yeah, for this bottom part here too, like for this floor zone, it was broken, but it wasn't retested at all. So this would not be considered an entry. If you did take this entry, this would have been your loss. So let's say you took it, and you would have got that stop loss hit. But nonetheless, I don't think anyone would have entered on this because of the way the candles were shifting, and there was no proper close. So there's no proper close below the zone when you're looking for a sell. You're not going to enter the position. But if you did, if you're still learning, that's okay. Keep going. We're going to be doing more of these videos every single week, every single month, every single year, every single decade, every single century, just to continue on with the whole theme of consistency and developing a skill set that's going to be able to last for generations and generations. You know, these ceiling floors, boxes, and proper risk management is going to be well known all over the wealth, like the financial literacy of the world, and how to build wealth throughout, like, not only the younger demographics, but just everybody. It's going to be so mainstream that it's just not even going to be funny anymore. It's like, yo, do you trade Forex? Yeah, of course I do. What about you? It's going to be weird not to trade Forex. It's going to be weird not to capitalize on the largest market in the entire world. People are waking up, and we cannot stop this awakening process. So USD CHF, we'll move on here. I'm going to delete this stuff just so you can see more clearly what happened. Yeah, so clear break into retest. This is like textbook, okay? I can't make this stuff up. It was a ceiling from this wick. It broke through, closed above, continued to retest and retrace back down. Here was your 1, 2, 3, 4, 5th hour. After the break, it went into the zone and even had a little bit of drawdown. So if you would have entered in the middle of this zone like this strategy suggests, you would have had 3.5 pips of drawdown. You would have been, if you're using a $100 account with proper risk management, 0.01 per 100, you would have had $3.50, or no, wait, 35 cents negative in the red. But then what happened after that? You continued to jump up 20 pips, and then it went down again back to 3.9 pips. So it never really hit your 2 pip stop profit after you set it up here at 10 to 15 pips. But it continued to break, and then boom, what happened? 30 pips on the dot from the middle of this zone. You would have hit your first TP on your first order, and then price continued to move down and hit your 2 pip stop profit. Now where we're currently at right here too as well, we can continue to adapt and just continue to grow. So we can move this zone lower, move these, and that's essentially the gist. Okay, and then the zone up here, because this would be the ceiling zone. This would be the new ceiling zone that was created because the highest level. Okay, so from this right here, this is where the previous setup was at. Then after all this stuff played out up here, this is how we adapt. We move this zone down here and we create a new zone up here. So now price is still technically trapped between this floor that it created and this previous, or this like newfound ceiling that it created. So then now we're just waiting for a break of either this floor to become a ceiling and continue on, or we're waiting for a break of this ceiling to become a floor to continue on. Okay. So I hope everything is making sense so far. Like, this is pretty straightforward stuff. USD JPY, same thing. Price broke, closed above, went to retrace. Boom, you had your 10 to 15 pips. You would have hit your 2 pip stop profit. Okay. Gold. I don't think we sent out gold, and I don't mess with Bitcoin. So boom, there you have it. I really like the USD pairs and the Canadian pairs, just because of the way that they played out and the way that we had to adapt. But all in all, what we can do now is pretty much remove everything because it's a new week. So how you do that is you go to this little circle, looks like a bunch of squares. You go to manage drawings, and then this is where you can delete everything. You can delete each and every single one of your drawings that you have on your charts in TradingView. And then take off all your flags just to start the week off fresh. So if I now go into every single one of these currency pairs, be fresh. Okay, so this is what we do. We go to the harmonic scanner. Like, this is the strategy. Like, this is how Christopher Derrick would go on his charts and set it all up. This is how Will Simon does it. And this is how everybody who's currently studying price trap and the strategy and the methodology within this whole thing, go and set up your charts from scratch. You go to the harmonic scanner. So it's just harmonics.im. You log in with your username and password, which you have to acquire by becoming a customer of our platform. If you need more information about this, hit me on the social media outlets that I posted in the description below. But for now, just follow along to see the value that's provided with this whole thing. Okay? So we go on the 1 hour. You can pick any broker that you want. And then I go top to bottom in these setups. So this is like pretty much giving a forecast of where the market is going to be going based on the harmonic patterns, Fibonacci ratios. Basically, there's a software that was created from Christopher Terry's mind. He was a 25 plus veteran year trader who's traded corporate and personal accounts of over $50 million. He's been a weekly feature to The Money Show, and he's also been featured in Forbes magazine as well. He actually gave this strategy to a software, and then the software developers created this application, which is known as the harmonic scanner. So that's kind of the breakdown of that. Yeah, literally you click on this pattern, it gives you the entry, stop loss, take profit 1, take profit 2, take profit 3. Okay, so, and then what we can also do is show you a trade that played out. This is GBP CAD. And this was an example of one of these trades playing out. So the entry was 1.1612, and you actually had the potential of gaining from entry 892 pips. Wow, that's powerful. So that's the harmonic scanner. I'm looking at this right now, and I'm not really seeing anything too amazing, too crazy that I would be, specifically interested in. Like this one's a little bit too choppy for me. Like the amount of candlesticks and wicks that are in here is too choppy for me. I mean, what we can do is put the zone here, put the zone here, and wait, and be patient, because this is a potential of 43 pips. So that would be a guaranteed trade. So we can do this one, USD CAD. So here we go. From this, that was the ceiling, and this is the floor. Then we draw our zones up. Shoot it across. And then same thing for the floor. Draw the zones, confirm everything. And then we're waiting for a break of the downside or the floor, and then continue. Or what also could happen is price could continue to just move above, break, and retest to the upside. We're waiting for the floor to become a ceiling and the ceiling to become a floor. Which, if you don't already know that, it's okay. I'm trying to use the most simplistic terms as I possibly can for this, just so the newest person clicking on a video trying to learn the price trap strategy can actually comprehend it with their mind, not knowing anything previously to this. So yeah, this is the reason why I draw this up. So it shows you we're waiting for price to close below this, come back in here. We're looking for entry in this yellow circle, and then that would be the real move. Now, I mean, of course I could draw it all the way down here, but the reason why I draw it up here is just a visual representation of what the trade could potentially look like. And then this could be like a trailing stop. What a trailing stop is a stop loss or a stop profit that you continually move with the trend, right? Okay, so that's USD CAD. Yeah, none of these are also most of these are not speaking to me directly because of just the potential. What is this? AUD JPY? Yeah, that's still a solid 54 pips if we trap it there. So that's good. What we do is put a flag on USD CAD, and we also put a flag on AUD JPY. And this would be the ceiling. Cool. I mean, I'm not really going to draw the zones up or anything like that because I want everyone to get used to just drawing these lines and just drawing it. If you want to be more visual, I can do it too. Plus, it just also gets you better drawing on the charts by putting in the chart time. Now, I'm not playing lo-fi beats in the background just because last time there was some interference with the microphone and stuff. So I'm just going to be doing it with no music for now, but as I continue to progress and finally purchase the Mac that I want, we'll be able to play the music. This is the zones for AUD JPY off the scanner. Euro CAD. This one, I really like this one, but it seems to have played out already. But if we do see 100 pip potential, I'm definitely interested in this one. So Euro CAD. Let's see. Here would be the ceiling. And here would be the floor. So this one really neat. What we're looking for ultimately is a move to the upside, a retest, and then a continuation for 100 pips. Quite literally the ultimate, quite literally the opposite could happen as well, where we could see a break to the downside and ultimately a reversal from what the scanner had called out. But if it's calling it for a buy, where this is like the primary, this setup right here, this would be the primary, and this would be the secondary for this specific setup. One thing I want everyone to realize when I'm going through this and doing the charts and marking everything up is it's the same thing over and over and over again. Nothing ever changes. Nothing ever changes with this strategy. Nothing ever changes with this strategy. It will be the same today as it will be 10 years from now. The reason why is because it works clearly, as I just shown you from each and every single one of these setups that I put in my my YouTube channel, which was here. So every single one of these to be able to track everything. So we click on this, brings us to here. We can see it's trapped. Now this is GBP CHF, just for an example. GBP CHF. If we still had the same zone here, it would still be trapped in between that zone. You see? Even flipping back and forth from this to this, you can see. So just by giving that there, it gives you more insight on why you should be so patient and why you should be consistent with this, because it works. Now, if we wait for the break and a retest and we see these pips happen like this, for example, like this huge move, if you're able to capitalize on something like this, that's a massive amount of pips that you're capturing. You're profiting heavily just off of a harmonic pattern that's given from a software where you're learning education from these educators and free YouTube videos provided by yours truly. So I hope everyone's getting value from this so far. What one was that? EuroCAD. So far we have three. We have AUD-JPY, we have EuroCAD, and we have USD-CAD. We go further down the scanner, it begins to show us patterns that have already played out. GBP USD, this one played out perfectly. Straight to TP3. This one as well, straight to TP2, doing a bit of a retracement and then continuing down. USD JPY. Whoa. Am I okay? Yeah, I thought I was going crazy there for a second. This one. Yeah, this one's good. USD JPY. So here would be the ceiling. And here would be we're just waiting for a break and a retest on this one. Same thing to the downside or to the upside. The scanner is obviously calling it for a sell. So the more primary trade that we'd be looking for is a break of the floor to become a ceiling. Then you take it. But also the possibility is also there too that we could have a shift or like a continuation of the uptrend and a break of the ceiling to become a floor. That's USD JPY. Euro GBP, this one played out. Euro JPY, this one also played out. Odd CAD, same thing. Euro NZD, same thing. Right to TP3. How much was this? 373 pips if you took it straight from the entry. Wow, that's powerful. NZD CAD, same thing. Straight to TP3 almost. Still giving you a potential of 159 pips. GBP NZD. Wow, that was a big one. 80 NZD. Yeah, this one happened a really long time ago. And then GBP CAD. Same thing. That was the 800 or 900 one. But yeah, other than USD CAD, AED JPY, Euro CAD, those are the only ones that I'm currently seeing. So for AED JPY, Euro CAD, USD CAD, and USD JPY. Okay. So we could just keep these in our arsenal. What I'm going to do is a recap video tomorrow and go over these pairs and go over these setups. But for right now, I'm about to jump on London session with one of our featured Go Live educators and our price trap analysis, Mr. Christopher Derrick. But I appreciate you guys so much once again for watching and continuing to follow the journey. Remember, like I said at the beginning of the video, if you have any like questions, you have any like suggestions or anything to help keep my content fresh and informative, please do not hesitate to give me a message or, like I said, hit me on any of the social outlets that I post in the description of the video. But other than that, I appreciate you guys so much for watching. Thank you so much, and stay tuned for new videos to come soon. Have a good night, everyone.